Alright, guys. How's it going? How's your weekends going today? See a couple of you guys here. But this is going to be recorded and posted afterwards anyway, so can rewatch. But can you guys hear me? Just send me a message in the chat just so I know, and we can get started. So, I'm going to be going over 5 tickers this week. So why not we just get started? So we have Airbnb here. So Airbnb, we're sitting right on support here on this green line. So we can see here that if we do not hold this, that we can look for targets to the downside, and we have 130, 125, and 120. However, if we do bounce here, you could potentially start a long position and target your way back up to this red line, this resistance point, and above that we can see 155, 160, and then this 164 region. So nice little thing to keep on watch here. So next we have AMD. So AMD here, we can see broke above this red resistance line and ran up all the way from mid 80s all the way to mid 90s. So it was a nice move upwards. But obviously with tech pulling back quite significantly last week, we did get that pullback on AMD as well. And we can see here, I've drawn out this Fibonacci box, which is denoted by the 50%, the golden pocket of 61.8 and 65, and then 78.6%. And that's just what this highlighted region is. So I'm looking for bids to come in within this box. Ideally, if we can hold this 85 level, that would be a really strong buying zone. You can see here as well, this is quite a significant level. We have multiple touches and supports and resistance points from these wicks previously at 85. So if we can bounce in this area with the golden pocket, that'd be very ideal. Otherwise, if we can't hold that, obviously we would look to the next point, which would be the most optimal buying zone if we do hold, just because this is the highest risk reward wise setup we would get at about 82.5. So for me, just watching AMD, as long as we hold 82.5, then we can look to start a swing position to the upside. So yeah, from here, once we get into this box, we want to see a clearance above 87.22, and above that, we do have $90 above, then 92, and then this 93 to 95 region. Then of course above that, if we do get there, we can look to test these highs in the high 90s. But I would definitely look to start scaling out over here in the mid 90 region. So that is the second setup I'm looking at for the week. Next up we have net. So net is a very interesting one where we have this upwards channel, bullish channel that we've been able to draw all the way down since last year, February. And it's been respecting this quite well actually. So we can see here, we did recover on net on this massive impulse up, making a new all-time high, and really not having many pullbacks throughout the whole way up. Um, so we can see here, we did test this upper region actually like 3 times. You can see 3 wicks up here, and we did ultimately reject it, which is something that we're not too surprised on. So what we can look for here now is um, a gravitational move towards this median, um, which would give us what, like mid 90s, probably around mid 90s. I can't really see this going lower than 88 if this isn't, unless this is a major pullback. But I'm looking for at least in this mid 90 region where we could see this pullback. And for me, below, uh, if you want to be a little more aggressive, you can take this this entry here, basically taking the low. The low of day from Friday's trading session, so around 101.3. But if you want to be a little more conservative and using a hold number, just use this $100 level as that psychological hold number. Because you can see here, we really didn't have that much of a pullback or trouble breaking $100. So I would expect that this is a key level that if we do break to the downside, that would open up room for further movements down. So we can see $95 and then probably 92 and the lower 90 range. Next up, so we have Nike. So Nike here gapped up from earnings here. It beat by quite a bit. I think it beat up by almost 100%, which is pretty crazy. Um, so it did break upwards quite significantly, gapping up to a new all-time high. And we never really saw this level get tested again. So there's something that's called the gap and go. So it gaps up and then keeps going. So we're starting to see signs of reversal here since we did tap the 161.8 percentage extension. And we did reject that ultimately with a 1, 2, 3, 4 different wicks here. And we are closed below the 8 EMA on the daily. So this is signs of a reversal as well. And if the markets are weak going into next week, then we can expect this to continue pushing down. So we can see here, if we do break this 159 level, we can see testings of 157, 154, and then ultimately 150. And then lastly, we have Pfizer. So Pfizer here is in this bull pennant formation, very clean. And we saw from Friday, Friday's price action was actually quite strong because the healthcare sector was very strong going into the week. So we can see that right here we're testing that resistance, and above resistance here we do have room to the upside to 40.75, 41.1, and then 42 plus. So we're looking for the healthcare sector to continue moving upwards and being leading the way, because we can see in the bottom left here that on Friday, XLU, which is industrials, and then XLV, which is healthcare, really did lead the way for the market, while tech really and everything else really dragged the market down. So we can see the market did pull back quite significantly on Friday, but healthcare stocks did hold up quite well. So think Pfizer, think Moderna, think UNH. So these stocks are something to definitely watch for this week if healthcare can continue to lead the way. So yeah, those are the top 5 setups that I'm watching this week. So I can take some questions now. You guys can leave some tickers. Just leave them in the chat and just leave the ticker there, and I will try to chart it, and we can take a look at it together. You guys can leave that now, and I'll try to take a look. Okay, it looks like, unless I'm not seeing it, but looks like nobody really has anything. Oh, upper echelon. If you're in the stream, you can leave the comment in the on the YouTube, by the way, just because it's easier for me to see it. But thoughts on Apple leading into earnings. Um, right, so let's look at Apple. So Apple here does not look very strong from a charts perspective. I am expecting this to pull back now. If we cannot hold above this 146.23 level, so this is really key. We did manage to close above it for the weekly, so we can go like this. But this is not a very strong candle we want to see on Apple. So I would expect from here, if we can't continue the bullish momentum early into the week, for this to push back down into this 137 to 140 region. And from there, um, as long as we can hold this relative area, I do believe the dips will get bought up. So that is something to watch out for. I definitely would not really get into a new Apple long position here. Um, Not yet, at least, because I believe that we still need some clearance, um, and we need to reclaim some levels before I would want to go long on Apple again. But if you are still in an Apple position that swung and you're up already, I would definitely just set your stop losses and forget about the position, because we are coming down onto the daily 8 EMA. So this is probably going to be a critical area of this 145 level where it's a make or break, whether we bounce here and continue higher first, or this is the start of the pullback that will bring us down to this 137 to 140 region where I believe that dips will get bought up. But yeah, I hope that makes sense. So, any other questions? All right, looks like everyone's good. So I'll probably wrap it up there. Um, if you're watching this video afterwards, make sure you subscribe, like, and comment if there's anything else you want to see from me, any educational videos, and I'll try to get them out for you guys. But again, the link to the Discord is in the description if you'd like to join. And yeah, thanks for listening in this week, and we'll see you next week.